Good evening, everybody. We're going to get going at 8 o'clock Sydney time, which is a couple of minutes away. I might just wait a couple of more minutes past the hour just to let everybody come in. Now, if you're on YouTube, if you jump onto our YouTube live stream tonight, I can't see the chat, so I can't answer any questions that you might type in, but I'll put a link there. If you want to join us in the live webinar where you can ask questions, then just go and register to attend using the link in the chat in the YouTube video there, and you'll be able to join us. So we're going to get going in a couple of minutes. So thanks for your patience. Jacob, good morning to you. It's evening here, but good morning to you, wherever you are. Okay, everybody, thanks for your patience. We'll get going. So welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Thanks very much for attending. Before we move along, if you just read through the risk disclaimer, and as we're going through the webinar, if you have any questions, just type them into the Q&A. That would be great. I've got the Q&A box open and the chat box open, but questions to the Q&A would always be helpful. Hopefully you all had a safe and happy Christmas. Happy New Year to you. Hopefully that we're having a good trading year for 2022. All right, so if you don't know me, I'm Duncan Cooper, Senior Market Strategist and Trading Mentor at ACY Securities, and I'm a full-time trader. Traded the market now more than 15 years, and I've had the opportunity over the last 10 years or more to mentor clients. If you have any questions, you can just email me at duncan.cooper@acy.com. And I'll normally get back to you within 24 hours, probably a lot less than that. But don't forget, I'm in Australia. I don't know where you are, but I do sleep. But as soon as I see your email, I will give you a reply. So if you want to follow me on the acy.com website, at the market news tab, you can connect with my analysis there and some of my education videos. A YouTube channel, ACY Securities Australia. You'll get my analysis and some of the education materials that's being put up there. If you want to connect with me personally, you can get me on Twitter there and LinkedIn. So I'll just give you a moment to jot those handles down if you want to connect. And tonight we're going to go through some live market analysis. We're doing that tonight and we're doing that tomorrow, just to get ready for the start of the year. What is happening, what levels are starting to hold or not, what kind of price action are we seeing in the market. And then next Tuesday, we'll be restarting the beginning webinar series. For those that haven't attended, it's your chance to start from the beginning. If you've started in the middle, you can start at the start. But on Tuesday 11th, we'll be starting from afresh. So be a good start to the year to run all through it. And we do have something new coming up for you as well, but I can't talk about that at the moment. But just to whet your appetite, we have something new for the ACY clients coming up over the course of January. So just hang tight. I'm not allowed to announce it just yet, but we'll be announcing something, resource that we're going to make available shortly. So let's get into the charts for the day. Just bear with me one moment. All right, my charts do look different. So if it's your first time on the webinar today, I'm just looking at the names. Might have a couple of new names on there. So I'm going to give you a link that you can download a configuration file so you can get my charts as well, if you want to do that. Nathan, you're asking me for a hint of what's coming. I'm not going to give you a hint. What's coming, you already know what's coming because Nathan's one of my colleagues, but here we go. So there's a link in the chat, and that link will give you a link to a file. I'll just bring it up on my desktop. So if you want to get my charts and indicators, download the WinRAR file from the link in the chat. Double click on it. You need WinRAR software to open it up. So WINRAR, go and Google it. It's a free download. And then these folders, you can see they need to be moved to the MT4 platform program folder. Watch the 2-minute video. I'll show you exactly how you do it, and then you'll have it done. If you have real problems, let me know, and I'll get someone on our team to connect with you and sort it out. But you should be able to do it. It's it's almost idiot proof, not quite 100%, but 95%. So have a good go. Shouldn't take you more than 2 minutes. Right. Before we get to my charts, well, let me just talk about my charts because I've just been talking about downloading. If you do download, what it will do is it adds in things to the platform, doesn't delete anything out. In the templates drop-down menu, it will add in my 4 templates here, 1, 2, 3, 4. Along the toolbar, it will add in some extra buttons that I use. And in the profile section, it will add in these 4 profiles. I'm currently using tonight the 12 pairs one. All right, now I just wanted to go and hop to the news. So I'm doing analysis tonight, and sometimes I don't look at the news because there's nothing coming out, but there is some news coming out today and this week. So just bear in mind, we're in the first week of the Christmas, I was going to say the Christmas period, but it's not the Christmas period. After Christmas, it's the first week coming back. Lots of people are still on holidays. The market will still be rather thin with orders, not as many orders as normal. So coming up, tonight we've got the ADP non-farm employment change coming out, 11:15 p.m. This is Queensland time. And then in the morning, 5 o'clock in the morning, we've got the FOMC meeting minutes. The Federal Reserve has already kind of said that we're going to have 3 interest rate hikes next year. So I don't think there'll be anything new in the minutes to stimulate the market too much, but you never know. Then early Friday morning, my time, 1 o'clock. In the morning, we've got the ISM Services PMI coming out, and the big one on Friday is the US job figures. So the market might be a bit quiet today because of the holiday, because as well of the meeting minutes coming out in the morning. So just understand what's coming out. Let's get to the charts. And that website I'm using there is called forexfactory.com. I've discussed that one before. So the first pair I want to go and look at is the dollar yen, because this is going to affect a number of pairs depending on what it does over the coming, I would say, week. So that being said, I did my 2022 outlook, and you can find that on our YouTube channel if you haven't seen it. I was discussing this monthly level of resistance here, 114.72, and we've been stuck in this range. I'll just color coordinate it so you can see we've been in this long-term range here. All right, but as you can see, price action in November, that's that red candle just there, rejected that area. And then last month, we kind of traded back up to the top of that area. And early into New Year, we've broken above monthly resistance, 114.72. And we've also broken above this weekly top, the top of that monthly candle there. So at the moment, that resets the tone of this pair into positive mode. Yes, we could still false break this move at the top and fall back into the range. But at the moment, let me just get rid of that line for the moment. We're coming up to test weekly resistance here at 164.46. I think we've been about 10 pips away from it, so that could call a short-term top. But if the trend continues, then the next level is this yearly high here back in 2016. Well, not, in fact, it wasn't an actual yearly high, but a very clear intraday yearly high. The yearly high was up here, but a very significant high that occurred in the year of 2016. That's at 118.65. So if we can break above the current level we're toying with this week, 116.46, that's the clear target. I did a video analysis of this pair today. You can find that on YouTube. Now, we haven't been at these high levels for a good 4 years. So I don't know personally how long we can exist there before we do come back in the range. Doesn't mean to say that we won't move back up out of the range over time, but there's going to be clear sellers up here wanting to sell in an area where the buyers haven't existed for a good amount of time. So to the weekly chart, trend was down. This is a lower bottom. We've broken above that level there. So this is the key level the market's going to need to watch, 115.516. And if we're in a very dominant uptrend now, we're moved up to a higher top, MACD's crossed up, we must hold above that level. So for the buyers to continue to win now, moving above key areas of resistance for a new uptrend, they must hold above 115.51. If they can't, that's weak, and then we could well trade back down the range. Day chart trend is quite clearly up. We had a very long day yesterday, breaking above that high. So before we broke above that high, there was still a chance we were going to hold, and the weekly downtrend could have been prevailing. But when we broke above that top, that changed the weekly to up. That is quite clearly up. But at the moment, we've been moving up now day by day by day. There must be at least 10 days here. You can count them yourself, but there's a good 2 weeks of days moving up through there with barely any pullbacks. So I don't know how far it can keep going before it has some form of pullback. So when it has a pullback, you want to be watching 115.51. And because this has been moving up, so this is dollar to the yen, but because it's been moving up, that means other pairs versus the yen have been moving up as well. Some are still in their weekly downtrends, but they've been moving up to higher resistance levels. So you need to know what's going on the dollar yen, because if this continues to move up, the other yen crosses that are in downtrends at the moment rallying, they may well change the trend. So the key line in the sand for a lot of these yen pairs is what is the dollar yen doing, and then what does it do on any pullback to 115.51. So, we're still in an uptrend on the 4 hour. This will probably cross down, I'm guessing, because it's overextended. And when it does, then we're going to see price action start to drift down and have a look at 115.51. So the question is, when it gets there, does it hold? If it holds, that's your opportunity to buy with the trend in or close to that area on a setup for the next move up to test this monthly area of 116.46. So is it going to move down? Hold. And then start to reaffirm itself, moving up on the 4 hour chart, for example. Can it put in a higher bottom on a pullback and then start to show you a continuation pattern? You don't need to wait for a 4 hour chart to start to show an uptrend. You could engage as tight as you can at 115.51 on a trend line break, maybe to the upside, depending on how aggressive you want to be. Now, if it doesn't hold and moves below, that really takes away the buy bias for this pair, because that is a line in the sand. That big move up through there is where the buyers are taking control. And are they going to remain in control? Because when we broke above that high, there would have been a lot of people in short positions because the weekly trend was down. And so they've switched, or they've just got out their trades. So if there wasn't a lot of switching and just getting out of trades, then the buying pressure will run out, and we could well fall back below 115.51. So time will tell. So if we do move back below 115.51, I'll be looking for then a rally back up to retest and hold. You could be waiting for a lower top to form on the 4 hour chart, or you could be waiting in that area for a trend line break back down, however, depending on how aggressive you want to be in terms of your entry technique, okay? At the moment, for me, this is a bit too high up the chart to be engaging. Doesn't mean to say that's the case for you. Let's just move it down the 15-minute chart. What we are seeing today, and another level that you can be watching at, obviously I'm discussing the 115.51 level that has to hold as support, or it could fail. But what you might find over the next few trading days is that the 116 level, see today how we've been moving below, back above, moving below, back above. Price action might, come down a good 30 pips from that level, or 40 pips. Does come down to support at 115.54. Could come back up to that level of 116, and 116 could become new resistance for the market. So, over the next few trading days, watch 116. At the moment, it's seeming like it's just wanting to start to hold underneath. So depending on how aggressive you want to be, you could be selling at 116, maybe stop at 116.20, targeting down to 115.51 and targeting on the basis that you think that was going to break. But overall, at the moment, the trends are up. So depends how aggressive you want to be. For me at the moment, I'm just going to wait for it to see whether it can pull back to 115.51. Does it hold? Then I'm looking to buy with a trend. Does it break back below? If it does, then I'm going to have to start to look at maybe becoming a seller. For the pairs that to the yen that are negative but rallying, what those pairs need is this particular pair to move back below 115.51 for those declines to start to reoccur on those pairs. So you need to watch this pair when you're looking at the other yen crosses. All right, let's get into the other yen crosses now then. So the Aussie yen, here's my weekly chart, and this has moved up a lot higher than I was anticipating. And if we go to the monthly charts, why was I not anticipating such a high move? We had these railroad tracks forming at this monthly top. There's another monthly level here that we pulled back below. And I was anticipating after a very negative November, we would have a negative December, but we traded down to support. This is a weekly line, but there's a monthly level here, which really isn't in focus at the moment. We've traded down to 78.46, that high here, and managed to hold. And we've actually traded up for most of December, and we're actually just above that level now. MACD is wanting to cross, but hasn't quite. So the question is this holding an uptrend on the monthly? So it's a higher top, higher bottom, just to a higher top. I was thinking this is maybe a double top, and then we're going to trade down. Obviously, support's holding at the moment. Now it's rallying back up. Is this a higher bottom forming to move further through, or is this the last gasp of the buyers? So the monthly is up. The weekly structure is slightly different. We did break this low just down here. Could be a double bottom, but we have seen some negative divergence. So that's why I'm kind of focusing more on the downside, because of that rejection at the top, and the divergence is just painting a more of a reversal picture right at the top there. So we've been reversing down from monthly resistance at 85.80. We traded down to weekly support. We did break it just, trading into that monthly top there at 78.46 area. And then obviously we've been moving back up. But that's to a lower bottom just. The question is this a rally to put in a lower top on the weekly structure? Or is this just going to continue up and through? So those are the two questions in my mind. And I've got a message coming in. Jacob, you say, if I analyze on the 1 hour chart, which smaller time frame? I don't like to enter much slower than a 15-minute chart. So if I was analyzing on a 1 hour chart, I would still be executing off a 15-minute chart. Yes, you could move to a 5. It's personal preference, but sometimes I will analyze on the 1 hour chart, but I'm still executing on the 15. Hopefully that was helpful. All right, so the question is this coming to put in a lower top? So if we move to the daily, the levels that I've got drawn in here, this lower line at 83.97 is an old weekly support low here. So we're trading into weekly resistance. And then we've got a daily top here at 84.15. And as you can see, we're trading into it and we're holding at it. And the lower line, the weekly level, 83.97, it's almost a figure at 8,400. So it is at a nice level of resistance at the moment. The day trend is up. So of course, if you're trading in this area, you're going counter to the day trend at the moment. So you might, if you want to be really aggressive, you could be trying to trade down from 84 with a tight stop, or you could be waiting for a bit more information, because this could just continue up. If the dollar yen continues up, dollar yen had a very big day up yesterday, and so did the Aussie yen. The day before, on Monday, things were looking negative for the Aussie yen. We had a very clear sell day down from the 62 area and the resistance. then we have a very positive day up. So we need negativity on the dollar yen really for this to start to hold and fail here. So keep that in mind. So, but a mix of trends here. The monthly is up, but has it double topped? The weekly is down, having a rally, and the daily is up. So mix of trends. It can be difficult. So when I'm dealing with mix of trends, what I like to look at is, you know, this top that came in here, why did that come in? There was negative divergence on the weekly. We failed at a major monthly top. We did fall down and change the weekly trend. We had a weekly negative divergence, and really this is a rally at the moment against the weekly downtrend in my mind. And it'll always be the same in my mind until we take that top out. So then I'm just looking for maybe a change in trend on the 4-hour chart. We actually got that yesterday, but then early yesterday, but then the strong positive dollar yen changed the trend back to up on the 4-hour. And that can, you know, sometimes happen, which is annoying if you're engaging in selling. So at the moment, you can see that today's trading, we've moved back below the 83.97, 8400 level, and we're kind of holding just underneath it. So if you move it to your 15-minute chart, you can see the price action drop below this area of resistance that I've got in between 84.15 and 83.97. And it's looking like 84 at the moment. And the last candle is just holding on the weekly resistance area, is holding at that level. For me at the moment, I could be aggressive and sell here, but because we had a very strong day on the back of the dollar yen having a strong day, I don't want to see another strong day in the dollar yen and be engaging in selling. So what I would like to see, back to your daily, I'd like to see a clear reversal candle up here that just screams out to me that, yes, the sellers are coming in at that level, first of all. All right, so if I could have that, then what I would be doing is then to the 15-minute chart. So let's say we have a very negative candle day down today. We don't know what today will bring. It might be tomorrow when that happens or the day after, but a very negative candle down. If I can see that, then the next day I'll draw a fib across that range, and then I'll be looking for maybe a 62% rally or a 79% rally to trade down once I see a failure at those levels. So I'm not seeing a reversal that I like the look of at the moment. Yes, we could hold here, and that could be the start from here, but I'd like to see a higher time frame shift first. Signal on the higher time frame that I'm not shorting an upward market here. All right. Now on the buy side, I don't want to buy into resistance. So yes, the day trend is up, and yes, I could look for an opportunity to buy in line with that trend, but I'm at clear resistance here. So I'm not going to buy into resistance. I would have to be buying from further down the chart so I can take profit at resistance. All right. So there are two sides of the coin to do there on the Aussie Yen. You could wait for a pullback. At the moment, the 4-hour chart is in a clear uptrend, but into resistance. You could be drawing your fib across that range on the 4-hour, then looking at your 62% level or your 79% level. How does price hold at those levels? Does it turn around and move back up from those levels? So you're just looking for price to trade down, and you're looking to buy a dip within the daily chart uptrend. All right. So there's that side as well. But at the moment, we're at resistance. We need to be away from resistance if you want to be buying in line with that daily chart trend. But notably, we are in that 62-79% area of retracement on the weekly chart where we would potentially top out. So I don't know if it's an area where I want to be a buyer, but I need more information to be a seller. Aussie dollar, so a weekly charts. And I'm just going to delete a couple of lines off, which I can clearly put back in a moment. And the monthly trend is down here, lower tops and bottoms. We had a positive month, bouncing on monthly support down here at 69.91. We just I think had a month up, and then are we getting ready to turn back down? So the monthly trend is down, MACD is clearly down. Weekly trend here, still down. The MACD is trying to cross up maybe or not, but this is just in rally mode. It's moved down. It's bouncing on monthly support. It's kind of had a 50% bounce at the moment. We'll put a fib in at the moment. So is this just a dead cat bounce? before we have a further month down. 1 month up and then more months down. Time will tell. So the day chart at the moment had a very negative Monday, just retracing back up from the drop on Monday at the moment. Structurally, it's still in an uptrend. I just want to put in some weekly levels of support that we're moving. But the lows that we were below, we're moving back above. So 71.06. So these are the barriers for a move down. 71.06 weekly support. And 71.70 weekly support. All right, so we're obviously holding above those levels and drawing a fib across that move down on the weekly chart. We've had about a 50% retracement. And sometimes the Aussie will pull at the 50 and stop. And there's some daily resistance there too. So this is just working itself out at the moment. Does it want to move higher? Or was that a drop down? Is this rallying up to put in a lower top on the daily to move down? So the day chart trend is up. There is that level of resistance. So if you want to be a buyer in line with the day chart trend, then 72.76 area is a big barrier for you at the moment. We've got old support becoming resistance, and we've also got a top in an area. So we've got double resistance there now. So be aware of that level. If you want to be a buyer, must be taking profits, I'm guessing, ahead of that level, because that's proving to you to be resistance. The 4-hour chart, what I noticed was that while we've been heading up into the area of resistance with higher tops, the MACD is being showing you negative divergence. So maybe this has topped up here at the 50% level. At the moment, we are holding at this area of 4-hour resistance. And the other thing I wanted to point out, let me just go back to my weekly chart. You can clarify this on your own weekly chart. We've had a week down this week as well. So we are negative for the week and we've had a week down. So I don't know if that changes your viewpoint of what the day chart is doing. Are we starting to turn more back to down? But the 4-hour chart is showing you negative divergence. So it's moved down. It's having a rally. And I noticed this earlier in the day. It's holding at the 62 here. So we've had 1, 2, 3, 4 4-hour candles holding at the 62% level at 72.41. And there's also an area of 4-hour resistance at 72.44. So that could be where the market's topping today for a downtrend continuation pattern to the downside in that 4-hour structure. I know there's a slight higher bottom here, but that's the clear move down. And this is a rally of that move down. And there's a 62% level there, and there's resistance. Now, if you're wanting to favor the buy side, don't go buying into resistance. You need to wait for a pullback where you can engage and you've got clear room to trade up to resistance. So it's not in a great area to be a buyer. From a seller's perspective, you need a trigger. I mean, we are at resistance. We are at 62% level. Simple trigger for you might just be MACD cross break of a trend line that I teach. We don't have that yet, but that might come in during the course of the day. So you can obviously decide which side of the market you think the market's now working with, and take your trade. Now, earlier in the day, we did hold at the central pivot point. So earlier in the day, you may have been able to engage in getting long, but it's being capped by resistance. So if you have gotten long, then up here is probably where you want to take profit, because 2 candles here are telling you it doesn't want to move above, and earlier in the day it didn't want to move above, and yesterday through New York tried to move above and got held there. So might move through, in New York, but New York held it there yesterday. New York could well hold it there today, and we could see it move down from the area. So whatever your trading strategy is, if you think this is an area to the short side, then wait for your trigger. It is at a clear area of 62% level. There's a pivot there, and there's 4-hour resistance. So it's been holding there all day. Euro yen. your weekly charts. And I'm just going to get rid of a few lines. I want to go to the monthly charts. I'm going to get rid of my weekly lines and they'll go back in a moment. Monthly chart. In my outlook, I was looking for a further move down, MACD crossing down. Got a lower top, lower bottom on the monthly. I'm just expecting maybe this is a rally. And over time, we're going to further move down and come back and retest 127.07 and long-term move down to 121.61. Of course, things can change in a couple of months. We could break above this area of resistance, especially if the dollar yen moves up, but that has to happen. So the weekly, you can see we've moved down from that top at monthly resistance to a lower low. So this is a rally like I was discussing on the Aussie Yen, and it's just sitting on just slightly above monthly support. And this weekly area here, so we broke below the last weekly bottom here. I'm just going to put in my weekly levels back in. So that's where we've been getting some support. And there's a level of resistance there that we're toying with. We've been below it this week. We rejected it at the end of last week. We've been below it this week. We're back above it. You know, come the end of the week, are we going to close below it or be above it? Just going to move to the daily and just see where we are in terms of the retracement. That's the weekly downward move. This is corrective at the moment. It's still corrective until we take the top out. All right, so even though the day chart trend is up, that's going against the overall monthly, weekly structure at the moment that we're seeing, which is negative. All right, those two structures could obviously change, but price would need to break above this high up here. Well, we're not doing that yet. Monday, we had a very negative day. We had a very positive day yesterday with the dollar yen moving up, but you can see yesterday couldn't close above the 62 level. Today, we're pretty much trading at the 62 level and trading down slightly. So I'm just, like I said on the Aussie Yen, this could be the retracement area for the lower top on the weekly in this 62.79% area. We could move a little bit further up to this area of daily resistance at 131.54. You know, if the dollar yen gets a bit stronger again, we may well continue to see this day chart move up. So if you are going to the long side, that's a great area to take profits at 131.54, and will be a great area to start to look for a decline as well. 4-hour structure is holding to an uptrend just at the moment. Higher top is this putting in a higher bottom here above the 130.73 level. What I'm noticing is there is some negative divergence here. So maybe we are topping up. I know price has gone up maybe just because of the dollar yen strength, but overall the momentum's running out maybe. And are we topping out? So we can see that 4-hour candle at the moment is rejecting 131.14. And it's also rejecting the 131 level. What I'd like to see, like I was saying on the Aussie Yen, I'd like to see a very negative, back to the daily, I'd like to see a very negative candle down that starts to show me that maybe this day trend is finished. I'm not seeing that just yet because I want to get onto the short side in line with the weekly trend. I'm expecting that this move down is going to get copied down here at some point. So I want to see a negative candle on the daily, like I was saying on the Aussie Yen, and then look for a rally back up to a 62 or 79% retracement level. So we can see price isn't doing too much today. It's been a little bit above 131, a bit below. Now this key area of weekly resistance, this high here on the weekly, we've been below it. We rejected it last week and we're back above it. Now for me to engage seriously to the short side, because we are still in a day uptrend, but the high time frames are down, I would need to see 130.73 break. Can we break below that? And then the next trading day, does that become resistance that you can trade down from? Because at the moment, this might just move back to this level, hold, and then you're looking for an opportunity to buy, still in line with the day chart trend. So this to me is the clear line in the sand. Is it going to be support or resistance? This is the line that you should be trying to trade around. Being a buyer, if it holds at that level, maybe a trend line break to the upside. If it breaks below, and you're seeing all the other yen crosses breaking lower, so you have a correlation of movement with the other yen crosses, then look for that level to become resistance over the next week. And that would be a good level to look to trade to the downside. I mean, even tomorrow, we're going to do live analysis again tomorrow. We might be starting to see that happening tomorrow. Or we might be seeing this still holding a support tomorrow. As well, if you want to be an aggressive trader, this could come down to this level, move back up to 131 where we're kind of fading today. And 131 could become resistance. 62% level here at the moment is maybe becoming resistance. So we could have put in the top of the weekly retracement yesterday. So if I'm going to engage to the buy side, I need to be getting in on support down here at 130.73 or close to that area. All right, and be risk-free on a retest of 131 and the 62% retracement level above. All right, moving along, euro dollar. Now this is very sideways. This is the weekly chart. I've got in here some weekly support that I've drawn in. In fact, I'm just going to delete my weekly levels out so you can see where I'm getting my other levels from. So to the monthly chart, there's a monthly high here that we've moved below, and the market seemingly wants to hold below it. MACD's crossed down, monthly trend is down here, lower tops and bottom. So this area of resistance at 114.12. Seemingly, the price doesn't want to get back to it. Weekly chart trend is down. This is just a corrective rally. It is maybe putting in a secondary bottom here, but it's all lower tops and bottoms on this movement down. All right, these next levels. So I've got a weekly top over here at 114.95. If we do move further up, that will be a level I'm going to be watching to hold, so you can trade down in line with the dominant high time frame trend. And we've got support down here. So my overall bias is to try and keep myself with the dominant trends that I was seeing last year. Monthly trends down, the weekly trends down, and the daily really is just consolidating. Could be just consolidating because of the holiday period. So it's been up to the top of the resistance area there at 113.83, got there close to the end of last week, and obviously you can see it's traded down. So when engaging on this pair, we're going to trade it like it's in a range. You could be buying from the base to trade back up, or trading down from resistance back down to the base. With the overall trends down, if you're trading down from resistance, there's always the chance as it moves down, then this next move down is going to break support in line with the trend. Obviously, if you're trading up, the length of the move up could be shorter because you're trading against the overall trend from the weekly and the monthly charts. So bear that in mind. At the moment, it's not in the most perfect area to engage at all. It's in the middle of that range. And this consolidation through here, this to me just looks like this MACD's crossed up. This is just going sideways. MACD's coming back up. It's just getting rid of this oversold condition. Back up close to the zero line. And then it's going to probably cross down. And if it does that, then we're probably going to see this starts to engage and try to break through 112.21. All right, so I'm just looking to see if price can get up to a higher level and then look for an opportunity to sell, trying to get back in line with the next move down. Even if you're just trading intraday, up at 138.83 is probably the area to watch. At the moment, it's in the middle of the range, so it's nowhere. Watch up here. If you want to trade with the overall trend, you're looking up here to sell. You just want to trade the range, you could be looking down here to hold and then trade back up, trade back down from the top of the range. At the moment, though, I don't really think it's doing anything that you can really engage in. Yesterday, it only managed to do about 50 pips. Today, it's probably done at the maximum about 35. And it's just kind of sitting on the 1300 number at the moment. It's probably waiting for the FOMC meeting minutes to come out in the morning, and you probably won't see too much life on that pair before then. All right, getting in the pound yen. Now this has had a very strong move up. It's retesting the monthly area of resistance that it broke above and then fell back below. And like the other yen pairs at the moment, it's not being able to hold above its closest figure level. So to the monthly chart, and in my 2022 outlook, I was saying we have this big range from high to low. Are we going to hold it and remain in that range? Are we going to move down through the year? What I also said was that we also have this very tight range here on the monthly chart that we're really not going too much anywhere at the moment. Are we going to break north or are we going to break south? It's going to break one way sooner or later. It has traded above this area of resistance this week at 156.59. Currently trading at 156.81. So we're just fractionally above that area at the moment. So what you need to watch, going to go down to the weekly. I could put in weekly resistance here and weekly support here, but the monthly area that I've defined at the moment is the area that the market is holding to and battling with to move out of the range or not. So 156.59. In fact, I'm not too bothered about putting the lower levels in, but I might put that weekly level in here too. 156.072. Now, if you wanted to be a buyer on this pair, you should have bought before down here on support, because this is now a resistance where it could fail. And I'm going to put in the next high level up here, 158.21. All right, not quite sure where that line went. All right, there it is. So obviously we've got some levels of resistance here that contain with monthly resistance at a fractionally above, weekly resistance where we did break above late last year or middle last year before, coming down. So the question is, are we going to break above or are we going to hold? Daily chart. So there's your monthly level at 156.59. If we move back below that today, this is really, that big long move up is really the last of the buyers. Because if we don't continue up to come up and test resistance, we move back below monthly resistance. Do you really want to be a buyer in this area where we've been playing at resistance over the course of last year? I don't want to be, but to be a buyer, if it starts to pull back, this area at 155.07. So back to the weekly. All right, that 155.07 level, I think it's that false line that I put in. All right, let me just double check my levels. Monthly high, weekly high. All right, it's that high there we need to have in. 156.07. All right, back to the daily. So that's that top there. So if you want to be a buyer and we have a pullback here, the monthly trend, the daily trend that we're seeing all the way up here at the moment isn't going to change its trend. The daily trend isn't going to change for a while. It could move back below monthly resistance. If you want to be a buyer, if you think this has still got some legs to it, to the upside, then what you want to watch is 156.07. That's that weekly top that we moved above over here. Can the buyers hold the market above that level or at it for a further challenge and move up to this top up here? For me, if it breaks back below that monthly level, to me, that's just weak. For this to continue up, it really needs to stay above 156.59, but it depends on your philosophy. 156.07 could hold as support. So for me, this daily trend move at the moment is a bit long in the tooth. And overall, I'm going to move back to my monthly at the moment. I'm not convinced that this level here on the monthly chart is getting broken. So I'd like to see a clear break higher. I'm not sure we're going to get a clear break at the moment on this day chart because it's too long in the tooth. And what we might need to see is a pullback, maybe back to this high here. Before then, the market can fill itself with buy orders and get enough momentum to move up these and through those areas and beyond that top there. All right, so I'm not really arguing where the trend is. I'm just arguing where's the best place to be a buyer. I don't think it's where the price is right now. So just logically look to see where a better area would be to be a buyer on a pullback. This area, so 154.73 on the day chart, could be a good level if you pull back to there. So just watch how price unfolds. To the 4-hour chart, still seeing a bit of a negative divergence picture on these yen crosses. There's ever so slight angle down there, and obviously this has been moving up to higher tops. So momentum might be running out, time will tell. So you've got the levels to watch for. I think the better levels to watch for if you want to be a buyer is can 156.07 hold or 154.73 hold on a deeper pullback. Obviously, if you want to engage and you're thinking that maybe this monthly level here is going to hold, and we're going to have a long-term move down through the course of the year, this might be an area where you want to engage in and get short. For me to get short, I would probably need to see price action get back below 156.07. And then hopefully if it does move further down, it breaks below 154.73. So it's just not an area where I want to engage to the buy side or the seller side, because I don't want to sell into possible support levels. But to the 4-hour chart, if we can move below 156.07, have a rally back up, does that become resistance and hold? Then I might look to trade down from that area. I would like to see all the other yen crosses turning negative to do that, because out of all the yen crosses, the dollar yen and the pound yen are the strongest too. So I don't want to really short something that's got some strength into it. Even though we are at key area of resistance, I want to know that weakness is coming across the board. So you can watch those levels over the coming week. We'll revisit those levels tomorrow. Pound dollar. Just going to take a few levels off and I can put these back in a minute. All right, so the monthly chart, it's been above and below 2 monthly tops here. I discussed those last week in the 2022 outlook. Really for this to remain negative long term, it needs to hold below these 2 tops. And those 2 tops are a bit more clear as seen on the weekly. It's these tops here. So we've actually been above and below this week a couple of times. So the buyers and sellers are toying. Sometimes the buyers are winning and moving above. Sometimes the sellers are winning and moving below. So that's where the line in the sand is at the moment. I do know we're getting a bit of a cross up here. But when I look at price structure, we've got lower tops and bottoms, and we're heading into, in fact, we're heading into a 62% level on this weekly rally. So the weekly trend is down, move down, just having a rally. And we're going to see that the day chart trend is up. And one of the lines that I did delete was this weekly low over here at 135.71. So as we are moving up within a daily uptrend against the weekly downtrend, so it's just a rally against the weekly trend. We're coming into a bit short of that weekly level, just here. Let's go back to my weekly chart so you can see where I'm getting it from. It's this low here. There's one slightly higher as well, but that's the first one we need to contend with, 135.71. So this uptrend we're seeing on the daily, this is way overextended on the MACD. And we're getting into the retracement zone of 62%, weekly resistance. This, for me, if I wanted to be a buyer, I should have been buying earlier, because this is getting into the seller zone of where larger traders are starting to, take their sell positions for the next decline, if that's going to occur. So, of course, it can keep moving up within the day chart trend. But if you're going to engage to the upside now within that day chart trend, be aware of where weekly resistance is. It's at 135.71. That's only like 33 pips away. And the 62% level at 135.79. So there's not that much room to that resistance area. T4-hour chart, like some of the other pairs, as it's been grinding higher, it went up here to a higher high, down to a lower low, and then it's had another go. Whilst it's doing this jerky movement of changing trend to the downside, back below those monthly levels of resistance, then back above, the MACD is showing you negative divergence. So maybe it's running out of momentum here in light trading through the Christmas period. All right. So it's not in an area where I want to be a buyer. I'm not ready to sell though either. I'd like to see a clear signal. That day chart, we had a very positive day yesterday. I'm not seeing any candlestick there that's just screaming out to me, okay, we had a very negative day yesterday in the weekly sell zone area to, shout out to me, do I want to engage in a sell? But I'm watching. It would be nice if it did come up to 135.71, 135.79, and then clearly reject. That would be great. And if you want to be obviously a very aggressive trader, maybe your bias is to the downside with a weekly trend, and you're looking at this area as an obvious topping out point. Aggressively, you could just be looking for a trend line break in that area if price trades up to it, but that would be aggressive. The less aggressive would be to wait for the 4-hour structure to turn down, but depends what type of trader you are. So yes, watching that area up there, I'm going to paint it in. We can see whether we touch it today. We can see what it's doing when we meet again tomorrow. All right, just going to go through the New Zealand yen and New Zealand dollar, and we'll probably get to the top of the hour by then. Monthly chart on the New Zealand yen looks similar to the Aussie yen, just barely holding its monthly structure. Higher tops and bottoms. Had the same negative candlestick pattern. I was anticipating December would go down, but it didn't from that pattern. And we're failing at monthly resistance up here. So the monthly is just holding its uptrend. It's just trading above last month's high. And this level here is a weekly area of resistance and a monthly area of resistance. And we're just trading into that level this week. Is that going to hold the market? I'm anticipating maybe on the Aussie yen and the New Zealand yen, we're going to put in a lower top on the monthly at some point after that candlestick pattern, but it has to do that. What we're seeing on the weekly, similar to the Aussie yen, is it's trading down to a lower point, changing the weekly trend to down, and we've got negative weekly divergence. So that's why I'm anticipating maybe the monthly chart is going to turn negative at some point. All right, because I'm seeing weekly divergence failing at monthly resistance at the top there. It's not because I want to be a seller, it's just what I'm seeing. So we're trading into resistance. What I would like to see, for me to engage to the downside, this weekly top here, 78.644. We were holding at that yesterday for a while till the dollar yen moved up. I would like to see price move back below that level if I'm going to start to engage to the downside. Sorry, I've got the wrong number, 78.644. To the daily. So you can see Monday we were negative and we got back below 78.644, but then positivity yesterday traded up to that monthly level. Today you can see we've touched the monthly level and we're retracing down, but the trend is still up on the monthly. I beg your pardon, trend is still up on the daily. So that's going counter trend to what we're seeing on the weekly. So I'm just waiting to see what it's doing. You know, if you want to be a buyer, a good level of support to be a buyer on a setup would be 78.64. So as I was saying on, I'll give you a few levels. There's one on the dollar yen, 115.51, one on the euro yen, which was 130.72 if memory serves. This level here at 78.64 is really the line in the sand for the buyers and the sellers. This is going to continue up the day chart trend. It should hold above 78.64. So if this pulls back, so you can put a fib in across that 4-hour uptrend, this trend is still going to move up further. It can dip below a little bit, 78.63. You might get support at the 62% retracement level, but it should be a very quick dip. It just trades below and snaps straight back above, or it just trades down to the level of support. So on your 15-minute chart, for the buy still be in control, 78.64 should hold as support. So if you've still got that inclination to be a buyer on the pair, if that level can hold, you can be looking for a trend line break to the upside for the next advance and challenge of the 79.21 monthly resistance level. Be aware that's resistance. You can see today, we traded up today and we held at resistance. That's why you need to take profits at resistance, because you know, it failed there once yesterday, failed there twice. If it got back up there again, there's a high chance it's going to fail once more. So if you want to be a buyer, that's where you should be looking for your profits. Seller, for me, can we break below 78.64? So if we're looking at that on the 4-hour chart, what I'd like to see is a clear break below. We did have one, but then it just moved back above. Can it put a lower top in that area on the 4-hour? You might be able to engage real tight to that with a trend line break. But I'd like to see a clear drop below and then a rally and fail underneath. As well, again, just to emphasize, I'd like to see all the other yen crosses being negative at the same time. I'd like to see the dollar yen negative too, if we're going to start to engage to the downside. All right, so that's what I'm looking at there on the New Zealand yen. Final one, New Zealand dollar. It's just toying with this level of 68.04 weekly support or resistance. It's a bit below, it's a bit above. And I think really the low, slow trading orders that are going through the market at the moment through the holiday period is just making it choppy. But let's go to the monthly. Very, very similar to, let me just take these other lines off. Very similar to the Aussie dollar, lower tops and bottoms. It may just pop up and just have a month up. I had a small trading month last month. Out of all the pairs, this is probably the most weakest one. Barely did anything to the upside last month in the face of other pairs moving up quite nicely. Monthly MACD's crossed down. So my bias is to the downside. As I said, if this monthly trend continues, I'm expecting maybe we can come down to this area. Look left at those levels of support that we've had in the past through the course of the year. So to the weekly chart, just putting in my levels of weekly support and resistance. We're at the moment just held between 68.04 maybe support and 68.59 resistance. Maybe we've actually topped at that resistance level, but we don't want to get below for too long below 68.04. It's ebbing and flowing above and below that level at the moment. To the daily, it's just changing the structure of the day chart to down. It's broken a low point here. Maybe it's needing to have a rally back up now to put in a lower top. But structurally, it's just starting to look negative after it's failed at that weekly area at 68.59. So high time frame trends are down. Day chart trend is starting to just turn ever so slightly bearish. It's broken the last higher support low to the downside. What I'd like to see on the 4-hour chart, keeps trading below 68.04, back above, below, back above. Below this week, it has been below, then back above. I'd just like to see maybe a clear break below that level. a deeper break below. So then we can start to, get the confirmation that 68.04 is in the mirror, in the rear mirror in terms of support. Can it come back up, maybe up to 68 or 68.04 again? But after a big drop, you're looking for the rally. At the moment, this is just rather choppy. It's above and below, above and below. Can we see a decisive move down away from the area for that area to become resistance? And it doesn't have to get back up to 68.04 to engage. It could come down first of all and test 67.02. And then simply come up and you get resistance from these lows here, around about 67.70. And you look for resistance to hold there to trade down. So this pair at the moment, it's no great pair to trade from an intraday perspective because it's just chopping around. Maybe it won't really get more fluid until next week when traders are coming back to work. So be aware that lots of traders on holiday. They might not be coming back to work till late this week on Friday when the job figures are coming out, or even to next week on Monday. So if you're seeing price action on the 15-minute chart or the 1-hour chart, just chopping around a key area of support or resistance, it can't decisively keep below, can't decisively keep above. Maybe just stay on the sidelines. Wait till you can see some decisive price action. All right, so give me the key levels I'm watching. We'll see what the market brings today into tomorrow morning with the FOMC meeting minutes, and then we can review those levels again once more. Fingers crossed for myself. I'm anticipating that maybe, like on the Aussie Yen here, this weekly rally may be coming to an end. Same with the Aussie Yen. Sorry, the Aussie Dollar, which is moving fractionally higher at the moment. This rally here is maybe coming to an end. The Euro Yen, this weekly decline rally coming to an end. But we might not see the ends of these rallies till the start of next week or into the middle of next week. So it is a new year. Just be patient, wait for a good signal. I encourage you to wait for a great level for the market to be at and fail at. Out of the pairs we've reviewed today, I do like the Aussie Yen. If we hadn't seen such a strong move up on the Dollar Yen yesterday, I will probably be selling at 84 area where we're at now. But I do know that if this Dollar Yen, back to its daily chart, if it continues up as it was doing yesterday, for another few days, that means the Aussie Yen is going to move up, and I'll just be, having egg on my face. So I'd like to see negativity coming into this pair. That will then give me more confidence to engage this failure at the 84 area, or maybe I have to wait for it to climb lower into the, the mid 83s to engage. Time will tell. Of course, I can be wrong. This may well just pop further up and come up in the new year and re-challenge the highs of last year, because this day chart trend is still in form. That's why I'm saying wait for a clear candle of rejection to prove that it's stopping and you're not just selling an uptrend. All right. Any questions? Type in before we conclude. For those that may be following on YouTube today, I can't answer your chat, but you're more than welcome to join us in the live webinars. If you want to do that, then I'll just bring up the webinar page for you. Webinar page is at acy.com, education/webinars, and you can just come along and register. So tomorrow we do have another live analysis webinar at 8 p.m. Sydney time, and then we've got education webinars coming in next week from Tuesday. Nathan, you're saying gold ? I can give you another 5 minutes and have a look at that. Let's just jump back to the charts. And with whether or not pairs are going to be moving up or down as we move into the new year, as I said in my 2022 outlook, before we get to gold, what is the S&P 500 doing? It is moving up at the moment. It's way overextended. If this does start to want to move to the downside, that's going to help yen crosses finish their rallies, because that would be a risk-off environment. But at the moment, the stock index is still wanting to go up. Had a small negative trading day yesterday, but it is still holding to higher tops and bottoms at the moment. All right, let's have a look at gold. I'm sure it's still in that monthly range. I'm just going to put, in, just for time, I'm just going to approximate where monthly resistance is and where monthly support is. Hopefully you can see that monthly price action, it's bound by those levels of support and resistance. All right, so it's consolidating on the monthly. The weekly, you put in a higher bottom here to a higher top, and then it just dropped back down, put in the lower bottom here, and it failed at this area of resistance over here. So structurally, if we want to go to the letter of the law, the weekly trend has actually turned down to a lower bottom. Is this a rally? Look left, there's resistance at 118.33 to the nearest cent, I think it is. Or sorry, to the nearest dollar. 118.33. It's 118.33.96, but that's close enough just for the analysis today. I'm going to move that 118.33. 96. And where is price holding at the moment? Fractionally underneath that, so we had this area of daily resistance that the market was holding. You can see it through last year, holding, coming down, holding, coming down. So that obviously was a false break to the upside above that weekly area resistance. Then we've come down to a lower weekly point. It's running back up to the area of resistance. So I would suggest that that may have already failed there. Probably a 62% retracement level. Yes, it is. So if that trend structure doesn't change on the weekly chart while we've moved to a lower point, we're running back up to resistance in the 62. Logically, I would have to say then we're going to see over time price actually moving down to retest the lower weekly level of support, and I'll be seeing a continuation pattern to the downside. Of course, a lot needs to happen for that to happen. In the short term, this daily trend is just holding itself together. It's still higher tops and bottoms, but this is, you can see white tops on that run up. Can it further move through? What is your 4-hour chart telling you? It's getting good support down at the 1800 level. Intraday, 1800 is a good support level at the moment. So 1800 is good support, and I would say 118.33 is good resistance. And if you trade gold, those two levels, so let me put in there. We use the last bottom there. It's almost the 1800 level. And it's right in the middle of those 2 points. So, you know, down here, you could be a buyer. Up here, you could be a seller. The weekly structure is a little bit more negative. Is that going to hold the longer term look of that pair or instrument, sorry, over the course of time? Probably need a bit more information. And a further failure up here would be a great area to sell, obviously, for to position yourself for the potential move that way. All right. Clearly, in the latter half of the year, well, November, getting above this area, which is the 1834 area, price didn't like it up there for too long before we want to get back below it. All right, so logically, 11833, 11834 area is a very strong level of resistance where lots of traders are selling at. Depending on the economic news coming out at a given time, there was a bit of excitement to get above that level for a while, but then we're back below. So it's all a question of what fundamental news is happening in that area. Is it enough to push it through, or is it negative enough to hold it once more to move down? That's probably the overall point to make. All right, so that's your gold. Thanks, Nathan. Cameron, thank you. All right, everybody, thanks for attending. If you're on YouTube, thanks very much for attending. Another live webinar coming up tomorrow, so we can recheck those levels and see whether we're getting any topping out action on those Aussie Yen crosses, or are the uptrends still holding form? All right, so stay safe, have a great evening. Thanks for attending, and look forward to seeing you tomorrow. Thank you.